and a lot is happening on the energy markets, not least of which is the sort of steady rise over the last 2 months in oil prices, as many were, I suppose, forecasting ahead of the third quarter. But let's get the viewpoint of our 3 guests this morning. Andre Belli, professor and founder and CEO of Balsen; Omar Obaidli, Director of Research at the Bahrain Center for Strategic and International and Energy Studies; and Ram Narayanan, Director and Vice President of Strategic Marketing and Business Development at Vedanta. Thanks so much, everyone, for joining us, and welcome back after the summer break. Great to have you all with us. Let me go to you first, Omar, and let's talk a little bit about what's happened to oil prices and in the context really of OPEC and what it might do next. People are saying it's likely to roll over its cuts very soon at the end of this week, next week. But Omar, are they stuck now, perhaps in a bit of a dilemma, OPEC, because of what to do next? Essentially, we've seen prices improve a lot over the last 2 months. So why should they be cutting more at this stage?
Well, I think they want to. First of all, they don't want to do anything. Their goal has been for the last 5 years, and will continue to be for the foreseeable future, to maintain price stability. They have done a pretty good job of doing that, given the various sources of instability in the oil markets, whether they're geopolitical tensions, supply disruptions, up and down economies, and so on and so forth. And so for that reason, it's likely that they're going to want to continue. In particular, they've got an eye on the Chinese economy, which seems to be going in the wrong direction. And so that they certainly don't want to, open the spigots too early. In addition to that, they've got a good thing going. They've got Russia seemingly complying at historically high levels. And they don't need to, get already back to full pumping ahead. So I think it's very much a case of as you were. And in the background, you've also got, the BRICS, expansion invitation going out to several key OPEC members: Iran, Saudi Arabia, the UAE, which will be joining a club that already features China and Russia and India. And so very much, giving an air of demonstrating stability, demonstrating cohesion, are very much the order of the day.
Okay, all right. I'll come back to you on that a bit with a follow-up. But Ram, welcome again. Let me go to you a little bit because, of course, India is a huge consumer, and it can't be happy to have seen prices go up by about over $10 in the last 2 months. That's not stability. That's not price stability to me. How is India pursuing sort of seeing this?
Yeah, thanks, Ella. Good to be back again. Yes, you are right in saying since India imports almost 80-85% of its energy needs, this is not good news. Oil touching close to 90 is not good news at all for the economy, especially the economy is doing pretty well. And we also have to keep in mind that India is approaching its general elections. So there are news that the elections might be preponed also. So therefore, this news certainly is not in the right direction. And demand is also pretty firm in India right now. Apart from the economy, we just entered into festive season in India. The next 2 months is full of festivities all over India. So therefore, the demand we see is pretty strong. So given the strong demand, the election background, and the government does not want to jeopardize the economy, because one of the stickiest points for the present government has been the way it has controlled inflation. Way it has handled inflation, rather, because we saw food inflation going up to 11% last month. And it has come down a bit, but certainly it has not subsided to a large extent, and especially the festive season on. So all this put together, it's not great news for India with oil touching $90 right now. And also given the fact that the import of Russian crude has also come down, which is coming at a huge discount. So net all put together, it's not great news for India, and I'm sure the government will be seriously concerned about it. In fact,
why have imports of Russian crude come down? Is there less available?
One is less availability. B is in the last 2 to 3 months, we had a number of refinery shutdowns across the different refiners in India, both private as well as the public sector refineries. And thirdly, you have to see that India is importing quite a lot of Urals amongst oil grades. And the Urals discount has come down. So 3 to 4 months back, it was $20 to $25. Now at present, it's hovering between $14 to $15. So that's three major reasons why it's come down. And as I've said earlier, also geopolitical considerations will play a big part. Given the fact that Russia is allying a little bit more with China, and India has given its equations to all the Middle East countries, especially Saudi Arabia. So therefore, it was bound to happen that Russian imports was bound to come down. In fact, I'm a little bit surprised at the rate at which it has come down. But yeah, at 42% of total of India's import needs, Russian imports had hit its cap, and it was bound to come down. But frankly, I'm surprised at the rate at which it has come down.
Okay. Andrei, welcome. Great to see you again. I know that you don't have access to Russian figures per se, but even if you were to speculate as to why, Russian exports to India have dropped, but within the OPEC plus sort of group argument, a lot of comments being made in the last few days that Russia's production is finally beginning to suffer. And so it's kind of easier for it to kind of comply to the cuts that it said it would do earlier this year, et cetera, and that Saudi might be sort of banking on that party. What's your sense about that? Do you think there's been a shift at all in Russian production? Are we seeing that evidence in data on the water, et cetera?
Well, the drop in Russian exports, let's say like this, because as you know, Russia has a very strong domestic demand for oil products, and half of production goes abroad and half of production more or less stays home. And how we can observe the market impact is by looking at the export figures. And the export figures have been decreasing lately, and reportedly they have been decreasing because of the India's slowdown. And colleagues can correct me if I'm wrong, but a number of maintenance operations on refineries in India slowed down a possibility for Russian crude to get to India. So it's not really related to Russian dynamics, neither is related to broader geopolitical context such as sanctions, but is, I would say, temporary issue. However, in the midterm, sanctions have a great effect on Russia. I still maintain this, but in this particular decline in exports, it's not really a Russia case.
Okay, so it's other factors affecting that. Amar, just back to you on sort of OPEC's decision or how it sort of carries itself going forward. I mean, is it a bit of a dilemma? Okay, the Chinese figures speak for themselves. Some people argue that China is still growing; it's just decelerating. So what's the problem? And at the same time, Amar, the US picture looks pretty good in terms of sort of global economy impact, if you like, demand on Chinese products, whatever. So are things going to be a bit trickier for the fourth quarter, given that this sort of even mild recession hasn't even hit the US yet? Surely that sort of throws a bit of a spanner in the works for OPEC. I mean, I know they do things month by month, but is it possible that they will, not do anything, not roll over these cuts for the time being, as the Fed policy also kind of adjusts to stabilize?
First of all, remember that because of the sharp cuts they've been doing over the last year, especially Saudi Arabia, there's a lot of excess capacity ready to bring online instantly if need be, if anything like a spike emerges. So they're in a very good position. Add to that Iran has seemingly gone surpassed sanctions. It's ready to be reintegrated back into the full oil production. So on the supply side, they've got breathing room and breathing that they can deploy, at a moment's notice. And then on the demand side, I think that what China's going through, although it's still growing, the deceleration, I think there are some significant question marks over the possibility of systemic weaknesses in the Chinese economy or the Chinese growth model. And so, given that OPEC has put itself in a position where it can react to price spikes much more quickly than before, it's better to for them to continue this sort of cautious approach and extend and operate on that basis. I think that's what their mentality is at the moment. And then the Fed, you know, I mean, it's still not cutting rates. So it's, you know, and it seems to be, you know, I have to say the Fed, you know, pretty much took a major hit to its credibility a couple of years ago when this bout of inflation started. And they were saying, oh, it's transient, oh, it's transient, oh, it's transient. And they're realizing, I think they've just digested that the only way they can regain credibility is to go, there's something similar to what Volcker did in the early 80s, which is to go to really, really, really deep and painful cuts. And they're willing to do it in a way that arguably exceeds what is necessary to achieve price stability. So I think that OPEC is, you know, has an understanding of the political economy of the Fed's decision making, and so that's why they're, you know, they're continuing on this line. It's a lot easier to instantly expand production if need be than it is to instantly cut production if need be. So that's why there's a sort of this asymmetry that you're witnessing.
Okay, Ram, just to go to you on sort of that excess capacity coming from other OPEC members. I mean, I know, you know, you take a lot obviously from Saudi. You're now switching back to Saudi a bit more than India had been earlier this year. But in terms of other, you know, as a consumer, are you feeling reassured by the fact that there is other supply now, sort of more Iranian coming aboard? There's an article there today mentioning Nigerian production's kind of recovering a bit. Mm-hmm. As a consumer, how are you feeling about supply in general? I mean, before the summer, the comment was still that there's too much supply, obviously, hence the OPEC action. But from a consumer point of view, are you reassured by that, from what you're hearing?
Yes, certainly. Right now, the way the Indian imports has been able to, like, you know, shift from, let's say, the shortfall in Russia to Saudi and Iraq, that is certainly reassuring. But in the past also, like, they have been regular suppliers to India. So therefore, India did have its sort of supply chain built up. And India is also building up its, you know, strategic reserves also. So that's another reassuring thing for which they are able to get the sources from all across. But the point is, I think that what is concerning in India is the way OPEC has done, given the fact that inflation is still pretty high across the world. And the sort of, like, you know, the global South countries, as they call it right now, are facing the pinch of high inflation. So at this point of time, like, you know, probably a little bit considerate action by the OPEC would have been appreciated in India, because like any increase in oil price is going to push up inflation in India, and we are still facing high inflation. So the reassuring point is, yes, we've been able to secure the oil supplies, and I don't think the future will be any concern getting the oil supplies. But as I told earlier, the cost of oil supplies, which is going up, it's certainly a big concern. And that's something which I think, like, you know, something which maybe probably a bit of diplomatic channels will be done to look into it.
Okay, Andre, let's talk a bit about Europe and inflation, not coming as under control as it is in the US yet. And also, if you can give us your perspective on the feeling now as we head into winter, whether there's this sort of same trepidation or nervousness about cost of living, gas prices to come, obviously. What's the sort of outlook for that, do you think, as we approach winter in Europe, from a consumer point of view?
Well, the overall crisis, like it was last year, is already back. So we are not living the same spiral of inflation, nor the same shock of energy supplies and pricing like it was last year. However, it was very important to understand that risks are still present. And for instance, European underground storages are now filled by 90%. And that's actually a record high for this time of the year. But we have to understand that underground storages provide only 1/3 of demand in winter, and the remaining has to be purchased with LNG. But most of the European utilities don't have long-term contracts on LNG, and they have with piped gas from Russia instead, which does not flow, or the remainings of Russian piped gas risks not to flow anymore. And once there is a problem, such as we have seen in Australia, a strike in Australia, their operator, Chevron, has to purchase LNG in the US to ensure that the long-term supply contracts, mainly with Asians, are prioritized and implemented. And in this case, Europeans are kind of left aside in this context. So it's a tricky situation, which is not risk-free.
Yeah, I mean, Europe last year in that crisis did compete with Asia, didn't it? It could afford, let's say, the spot LNG more, even when prices were spiking, took a lot of US LNG and took, LNG away from Asia. We have an article today saying that there's LNG tankers already heading to Britain, Belgium, Netherlands, and Germany. Again, I know the LNG market it's been quite a yo-yo in the last 5 years, really. We've literally had extremes every year come on board. Will we have the same situation if we get a cold winter, if we get an initial sort of early spike? Will Asia be able to compete for spot LNG if it needs extra LNG, etc., or will it switch more to coal as it did last year? I'll go to Ram after that about India and coal as well. But Andre, your opinion on that?
Well, so far we are hearing very much about a forthcoming Asian, particularly Chinese gas demand, which will absorb all the capacities, but so far we didn't see it. We haven't seen it yet. We heard a lot about, but there is no evidence that is actually happening. The risk is more on the supply side. For instance, Europe relies now a lot on the United States, but gas demand in the United States is growing. If in China coal is not outplaced by natural gas, in the United States it is actually outplaced by natural gas, and that is way more problematic, at least something to watch at, as I would say.
Okay, thanks. Ram, let me just go to you about gas versus coal energy. We've got an article today that says India extends validity of coal import directives. India will do whatever it takes, right, to keep its energy going. And as oil prices rise, how much more is it going to switch to coal this winter, do you think? And what oil price would it take? Some people are saying it's going to hit $100 before the end of the year.
Yeah, in fact, I was just speaking to some government officials today morning, where certainly the directives have been given to all the power plants across India to import coal and cover the requirements at least till March of 2024. And why March of 2024? That's when the elections are expected to be held, right in March or April of 2024. Because what has also happened is power demand in the month of August and September has been unusually high. Because the monsoons have not been as high as what was expected to be, and the weather is pretty warm for September. In fact, in Mumbai, where I live today morning, I was sweating when I came to office, which is very, very unusual for this time of the year. So because of high power demand, as I said earlier, the festive season has just started in India. So therefore, demand is going to be high. So therefore, the government has told all the power plants to import their coal requirements and cover it up. Now, the second part of the question is how much it will go up to. I think India's coal mix is about something like 65 to 70%, so probably plus minus 2 or 3%. So that's what, but I don't see a major decrease in coal consumption in India, at least for the next 1 year. And we also have to keep in the background that India's domestic coal production has also been pretty good. I think we've seen an increase on a year-on-year basis also, which has been pretty high numbers also. Now, the second part of the question is what oil price it will move it up. Difficult to answer that question because given the fact that the power demand has to be met. But as I said earlier, like anything, right now also it's pretty high price for India. And even if it touches 100 also, it's going to be pretty bad for the Indian economy. So net is, I think the coal imports are going to continue for quite some time in India.
Okay, thanks, Ram.
That's what the outlook should be.
Is there any, in terms of the $100 mark, which, just 2 months ago, everyone was saying not going to happen this year. Now everyone's saying is going to happen by the end of the year. How quickly things can change, obviously, in this market. Is there a price at which OPEC would stop cutting, really? They want that magic $90 to stay, don't they? So they're going to have to kind of keep going to stabilize that. At what point, as we inch towards 100, will we see them slowing down, do you think, if at all?
So I think what's important to consider is if as it inches up to 100, what's causing that inching up to 100? If it's something like transient supply cuts or supply problems, hurricanes, that kind of thing, then I think you're less likely to see, an intervention, because it would be something that is generally acknowledged to be transient. So no need to, change the system. But if it's something that looks like it's going to last, like some sort of sustained weakness in the Chinese economy, as Ram mentioned, maybe some problems in the Indian economy, then I think that's at one point where you'll see an intervention on economic grounds. Add to that there may be some political pressure for them to do that, not coming from the West, ironically, maybe coming from India and China along the BRICS now nexus, whereby they say, look, can you help us out? Can you cut down? Can you increase oil production and push prices a little bit lower? Which would be, as I say, very, very symbolic of the sort of transformations we're seeing in the world.
Okay, well, look, there's a survey question which addresses China's sort of strategy going forward. It will prioritize strategic geopolitical strength over more economic stimulus, i.e. fund the military and not its bank bailouts. I don't know if it's at the moment has a dilemma where it's putting its funds. It's certainly, in a big transition, as Amar was mentioning earlier today, in terms of how well that transition is going. Some people say it's going okay. It's a big transition from a sort of, I suppose, industrial manufacturing base to the service economy. And there have been some relatively positive numbers on manufacturing actually recently in China, but criticism still, Amar, on how much commitment China's making on its bailouts, right? The bank bailouts, the property sector bailouts, that hasn't come through yet. But first, let's just finish the survey. Let's get everyone to agree or disagree that it's prioritizing geopolitical strength over economic stimulus. Do you agree or not agree? And let's see what people say. Amar, just to stick with you on that, I mean, would you say that's kind of the current, would you agree with that at the moment, i.e. not enough economic stimulus has gone through because of
also, I think that,
I
mean, one view I've heard, which I'm somewhat sympathetic with, is that now that Xi Jinping has reaffirmed himself as, leader for the coming period and has gone past the sort of political cycle, pressures, he wants to feed the Chinese economy some bitter medicine. There's an acknowledgement that the existing economic model and its emphasis on real estate is not sustainable and creates harmful tumult and volatility in the Chinese economy. And the only way to get this out of the system is just to not plow in with a stimulus and just to let whoever needs to suffer financial ruin, to put it bluntly, to suffer it and to create that discipline. Because I'm from Bahrain, and in the region, in Kuwait, for example, we've had this historic cycle of debt forgiveness, which is another word for another form of fiscal stimulus. And it engenders, the moral hazard, it engenders, imprudent investments. And I think that there may be, and I'm sympathetic to this idea that China's leadership wants to, move the economy in a different direction. So in that case, it's not sort of political dilly-dallying or vacillating. It's more like a message, albeit a quietly delivered one, that, enough with the casino real estate model.
Okay, Andrei, let's just talk a bit about Russia again. Just in terms of that, the revenue model for Russia, what's happening, obviously it's having to continuously fund its war. And that, as we said earlier, that's perhaps beginning to pinch. From a revenue point of view, what are the indications that you're hearing about? Clearly, the increase in oil prices has helped it a lot in the last couple of months. Does that feed through in any major significant way? How will Russia, do you think, act within OPEC Plus as a result? Will it actually commit to another 500,000 in cuts? Will it have to anyway because of production? Where do you think it sits? Because for most of this year, it's been pretty irrelevant in OPEC Plus. Let's admit, and Saudi's been carrying the mantle, happy to do that, and Russia has benefited so far. Do we see more expectation placed on Russia going forward?
Difficult to say. I think it is difficult to say. There are various possibilities that may go. Of course, Russia may prioritize a more elevated price, but at the same time, it has to look at the situation overall, and I guess the commitment within the OPEC Plus will still work. In particularly that Moscow seems to be willing to get out of the political isolation. And if there are tense relations with OPEC Plus and Saudi Arabia goes to another price war with Russia, then Russia will be even more isolated and will also suffer from budgetary viewpoint. Yeah, so I would say that it is unlikely that Moscow will dare having another area of tensions with the Persian Gulf countries, but it is difficult to predict.
Okay, thanks for that. Ram, let me go to you a bit about this BRICS. There was recently obviously a meeting and China is looking to sort of expand that group into sort of the new sort of power base of the world. India and China obviously have their disagreements as well, don't they? Politically and geopolitically speaking, and even economically maybe. So, you know, is India going to change its stance at all with regards to how it's dealing with China versus the West? I know it has its neutral policy firmly in place, but how are the dynamics impacting, do you think, thinking there as elections also come to the fore next year?
Yeah, see, right now India is in a sort of sweet spot, as I said earlier, like, you know, in the relations with the West as well as with Russia, and of course there are quite a number of issues which Edward knows about China also. So India's policy right now is how to align with everybody. Now coming to BRICS expansion, obviously, like, you know, I think one of the thoughts behind is how it can be used as the anti-West model and become a sort of a platform for the global South, as they call it. India obviously has had some reservations about it, and I think what I heard about from the BRICS discussion was the India's reservations were taken care of, and I think there's also talk about a BRICS currency being talked about it, which India has opposed to. I think that is sort of in consonance with India's, you know, alignment with the West also. So as regards to China, still there are quite a number of border issues, quite a number of economic issues is still going on, but still the trade between India and China is still on. It's not that it's reduced much as a whole. So therefore, I would expect that given the elections are coming near right now, so not much of a change is going to happen in India's stance right now. And I'm sure everybody knows in the next 2-3 days, we are having the G20 summit in New Delhi. And India is looking forward to stamp its authority or stamp its presence as a global superpower, as a global major player, as I would say. So therefore, like, you know, in terms of geopolitical stance, I don't see a big difference coming in India's stance over the next few months till the elections get over and the new government takes over.
Of course, Xi Jinping is not going to show up for that G20 summit. So,
yeah, today Mon just so scared that, you know,
we don't have China, so the president. So
and today Mon just so scared, as you had said, the first lady of US, she tested positive for COVID, but we were told that Joe Biden has tested negative. So hopefully, and I'm sure he'll be able to make it.
Maybe you should rest anyway for many other reasons. But there's the survey question, and I'm going to just go to Amar to close up on a question on Gulf economies. But let's have a look at that. So that's pretty tight, really. Agree, disagree, 55-45. So it's probably a mix of the two. Amar, just to close up with you, give us a sense. You mentioned Bahrain and, you know, how it deals, and Kuwait, obviously, and a few of the Gulf economies, how they've dealt in the past with their sort of windfall gains, etc., and you know, and debt. I mean, they don't have as much debt as the West, but again, I mean, you know, Gulf oil producers having a great year, obviously, this year and also last year, not a bad year at all. How critical are those revenues to? Obviously, they're critical to these projects that Saudi has and the UAE has going forward, but you know, what's the thinking there in terms of how they're managing these gains that they're getting from oil prices? And do you think there has been a fundamental shift in that expenditure?
Yeah, I mean, absolutely. There is a fundamental shift because through previous booms, what we've seen is increased public sector hiring and increased, you know, bonuses for civil servants. And, you know, what I would call, you know, manifestly, poorly chosen mega projects. On this occasion, we're seeing a lot more discipline when it comes to public sector hiring. We're not seeing the sort of Santa Claus, you know, bonuses for everyone style distributions. So they've successfully arrested that part. The big question mark remains over the investments they are making. And when it comes to these this newer generation of mega projects and giga projects, I'm here to be upgraded from mega projects to giga projects, is that, are these going to work? Are these going to deliver the sorts of returns? At the moment, there's big question marks over over some of these really exciting projects where they're going to deliver. If you just take the simple example of the now at the beginning of the football season, Saudi pro league, they're spending huge amounts of money on bringing players, hundreds of millions of dollars, and it's there is a plan. Is this plan going to deliver? We will have to wait and see. It's the same with the golf. It's the same with the Formula One, and that's just in the sporting domain. And then we're still waiting to see what's going to happen with NEOM, with the Winter Olympics. With the World Cup bid, supposedly Saudi Arabia and in Egypt and Greece. So I think that there's definitely much more discipline than before, to answer your question. But the question is the well-intentioned alternative direction for expenditure going to deliver the kind of returns they need to maintain their exceptionally high living standards? And for that, I'm afraid the jury's out. We'll have to.
And also to actually shift their economic model as they intend to over time. And of course, we didn't talk about how inflation is hitting the Gulf as well. But we'll leave that for another day. Thanks so much to Omar, Andre, and Ram for joining us today. Thanks everybody for joining us, and look forward to seeing you tomorrow. All the best.
Thank you.
Thank you. Bye-bye.
Bye.